Welcome back to another episode of the Ontario Mortgage and Real Estate Insights podcast. I am your host, Steve Hamwin, and today we have some fascinating updates in the mortgage and real estate world that you will not want to miss. From significant rate drops by some of the biggest banks to a slight decline in the national mortgage arrears rate, we have got a lot to cover. Let us dive right into our weekly mortgage digest. After a spike in bond yields last week prompted some mortgage lenders to increase certain rates, fixed mortgage rates are again trending downward. Yes, you heard that right. National Bank was the latest big bank to lower its posted special rates this week, following rate drops by BMO and TD Bank last week. The rate cuts averaged 5 to 10 basis points, which translates to 0.05% to 0.10%, although TD did drop its 3-year and 5-year uninsured rates by a full 30 basis points, or 0.30%. Numerous other mortgage lenders have resumed their rate reductions this week, following the decline in Government of Canada bond yields, which typically lead fixed mortgage rates. As of the close on Tuesday, the 5-year Government of Canada bond yield eased back to 3.46%, down from 3.60% last week. The decline in bond yields was triggered by last week's weak jobs report, which revealed the unemployment rate rose to 6.4%. That is 1.4 percentage points above where it bottomed in January 2023, noted mortgage broker and commentator Dave Larocque. Larocque also pointed out something worth noting. Unemployment rate increases of more than 1% typically presage recessions. Interestingly, while Government of Canada bond yields have been volatile of late, they have still fluctuated within a consistent range and have continually reverted to about the level where they now stand. For today's mortgage shoppers, Larocque continues to recommend a 3-year fixed mortgage, which balances a competitive rate with a shorter time horizon to be locked in for. The premiums required for 1-year and 2-year fixed rates remain substantial, he notes. While 5-year fixed rate terms are offered at lower rates, I worry that 5 years may be too long to be locking in when rates are near their cycle peaks. In other news, Canada's national mortgage arrears rate fell slightly in April, according to data from the Canadian Bankers Association. The arrears rate, which tracks mortgages that are behind payments by 3 months or more, fell to 0.18% from 0.19% in March, where it had been for the previous 3 months. The latest figures work out to just 9,152 mortgages in arrears out of a total of over 5.02 million. Despite trending upwards from a low of 0.14% in 2022, the national average arrears rate remains well below the highs seen during the pandemic, when it reached a peak of 0.27% in June 2020. The rate of delinquencies is highest in Saskatchewan at 0.56%, although that is down for the 4th straight month from a high of 0.60% in January. Delinquency rates remain lowest in British Columbia at 0.16%, which is up by 0.01%, and in Ontario at 0.13% with no change. In the midst of a raging housing crisis, Toronto's real estate market is suddenly inundated with a record number of homes that nobody wants to buy. The city's condo market has had a surge in listings, yet a critical shortage of multi-bedroom units, leaving a significant segment of buyers, families, underserved. According to the Toronto Regional Real Estate Board, condo sales in Toronto fell by 28% in June compared to last year, while new condo listings rose by 16%. The number of active condo listings skyrocketed by 70%, hitting a record high of 10,688 for any month. Particularly notable was the surge in listings for units in the 500 to 599 square foot range, which soared by 50% compared to last year. This recent data underscores a paradox in urban planning and the disconnect between developers and the market. A survey by the Toronto firm Devron Developments revealed that nearly half, 47%, of Greater Toronto Area residents view condos as a viable long-term housing solution, and more than half, 53%, of current condo owners are open to purchasing a larger unit for extended living. Despite this apparent readiness for larger living spaces, developers continue to flood the market with smaller units. Puyan Safapur, president of Devron, explained that the disconnect between developers and the end users, those who eventually live in the completed units, begins at the pre-construction level. There's this misconception that it is hard to design and sell to the end user, and if we're not designing and selling to the end user, who appreciates and cares about features and sizes of the suites, we're going to be selling to investors, Safapur said. Investors want something that is smaller and easy to transact, and so we developers fall prey to this way of thinking. Safapur also noted that, in an effort to keep construction costs low, developers predominantly build smaller units, which exacerbates the shortage of family-friendly homes. It's an approach also rooted in misconception, he believes. There's a business case showing that a building with less units by way of having larger suites on average actually costs less to build because there are less kitchens, less washrooms, and much less development charges, Safapur said. He explained that a typical 40-story building in downtown Toronto could save upwards of $20 million in construction costs by building larger suites, around 1,100 square feet each. Safapur and his team are currently bringing multi-room, family-friendly suites to market through their 39-story project, 101 Spadina, located at the intersection of Spadina Avenue and Adelaide Street in downtown Toronto. Still, the broader industry is lagging behind. In 2020, the City of Toronto released guidelines aimed at addressing the shortage of family-friendly sized condos, encouraging developments to include at least 25% large units, with 10% being 3-bedroom and 15% 2-bedroom units. Despite these efforts, developers are failing to meet the targets, further exacerbating the housing shortage for families. Matti Semiatitsky, a professor of urban planning at the University of Toronto, said the city could be doing more on their end to encourage and support family-centric residential building in Toronto. The city, within its own purview, can be investing in the public places and amenities and making sure that those investments are being timed in such a way that they're available earlier in the completion process, Semiatitsky said. He recalls Toronto's renowned condo neighborhood, City Place, situated between Bathurst Street and Spadina Avenue just north of the Gardiner Expressway, where a whole generation grew up before there was a local school and a rec center. Safapur believes that for the first time in a long time, the wants and needs of end users in the condo market are not being buried by inflated investor demands. What's happening right now is quite healthy because it's become a buyer's market and the consumer's preferences are actually being seen, Safapur said. And they're saying, we don't just want small units. In June, the average rent price in Canada rose 7% year over year, marking the slowest growth rate in 13 months. The average asking rent was $2,185 last month, down $17 from May, according to the latest monthly report from rentals.ca. This 0.8% month-over-month decline is the largest decrease since early 2021, reversing the typical seasonal trend of rising rents at this time of year. While rent price increases may be easing, they are still up by more than $530, or 32%, since hitting their low of $1,662 in April 2021. Rents at the national level are clearly leveling out, said Sean Hildebrand, president of Urbanation, which co-released the report. At this stage of the market, strong rent increases are mainly limited to inexpensive cities, particularly in the Canadian prairies, while larger markets dealing with severe affordability issues are seeing rents slow or fall. Ontario and Quebec were the only provinces to record month-over-month declines in average rent prices, while rents in British Columbia remained flat. On an annual basis, Ontario was also the only province to see prices decline, falling 1.3% to $2,382. Meanwhile, rent price growth continued to accelerate in Saskatchewan, leading provincial increases for the third consecutive month. Rents for purpose-built and condominium apartments in Saskatchewan are now up 22.1% year over year, though the average rent remains 38% below the national average at $1,339. Quebec also reported a 1% monthly increase in asking rents and a 5.1% annual increase to $1,979. At the municipal level, Regina once again led rent price growth, with an annual rise of 22% to $1,393, followed by Saskatoon with a 17% increase. Markets that reported the largest annual drops in rent prices included Barrie, Ontario, down 9% to $2,218, Hamilton, Ontario, down 7% to $1,940, Guelph, Ontario, down 5% to $2,252, and Windsor, Ontario, down 5% to $1,630. Here are the average asking rents in key municipalities across the country in June. Toronto, Ontario, $2,715, down 3% year over year. Vancouver, British Columbia, $3,042, down 8%. Montreal, Quebec, $2,013, up 4%. Calgary, Alberta, $2,092, up 4%. Ottawa, Ontario, $2,190, up 3%. Regina, Saskatchewan, $1,393, up 22%. Winnipeg, Manitoba, $1,663, up 9%. And Halifax, Nova Scotia, $2,236, up 13%. According to a recent report released by Remax Canada, a vast majority of Canadians are beyond pleased with the ongoing quality of life in their chosen neighborhoods. As indicated in an official press release by the real estate giant, aspects surrounding affordability continue to rank highest regarding desired location, while proximity to in-office workplaces has substantially declined as a priority in the post-pandemic era. According to data from a 2024 survey conducted through Remax, affordability concerns remain dominant for 44% of the respondents, while walkability and urban access only hover around 10%. Additional information also indicated that 69% of surveyed residents believe that a sense of belonging and stability in a residential area has never been more important, with 46% feeling that diversity and inclusion have become a growing priority for desirable residential communities. Some of the top neighborhoods for livability, according to Remax's data, are the downtown West End in Calgary, Daniel McIntyre in Winnipeg, and Oliver Wetquintoin in Edmonton. However, while many of these locations are in the western reaches of Canada, a few Ontario locations have made the list. The full list of top Canadian neighborhood locations is downtown West End, Calgary, Daniel McIntyre, Winnipeg, Oliver Wetquintoin, Edmonton, Heritage, Regina, Sandy Hill, Ottawa, Quinpool areas, Halifax, Westmount, Saskatoon, Lesud West, Montreal, Old Town, Toronto, Corktown, Hamilton. Data collected for Remax also indicates that in Ontario, many of the above-listed neighborhoods are located within older, established areas with high walkability scores. Additional desirable neighborhoods in Ontario include O'Neill, Durham Region, Williamsville, Greater Kingston, Downtown London, London, Garson, Sudbury, Simpson, Ogden, Thunder Bay, Sandy Hill, Ottawa, Jefferson, York Region. The report also indicates that in Peel Region, Brampton's Northwest Region was one of the most desirable in Ontario due to its suburban setting, approachable nature for young families, and ease of integration for young professionals. For Mississauga, the city center has been listed as a #1 location for potential residents due to its vibrant selection of shopping, dining, entertainment, and cultural districts, alongside a substantially easy commute to Pearson International Airport. Additional information on sought-after real estate locations in Ontario, as well as full survey data, can be found on Remax's official website. Now let us shift our focus to Barrie, Ontario, where a developer has taken a unique and award-winning approach to residential development. Georgian International, based in Barrie, is not your typical Canadian company. Their residential development, Braestone, located in Horseshoe Valley, has recently garnered significant recognition. The Braestone development was named Best New Home Community of the Year for 2016 by the Canadian Home Builders Association. Additionally, the Braestone Discovery Centre was also awarded the 2016 Best Low-Rise Sales Office in Canada by the same association. Braestone stands out from conventional suburban developments. Situated on 566 acres that include a working farm in Horseshoe Valley, the development offers homesteads on estate, lots of up to 1.5 acres. The project is particularly targeting empty nesters who are drawn to a modern interpretation of country-style design, influenced by the farmhouses, sheds, and barns of the Oro Medonte region, as explained by James Massey, president of Georgian International. Massey, along with his longtime business partner David Bunston, has taken a patient and strategic approach to the Braestone project. The land for the development was acquired in two separate transactions at the start of this century. The vision was to create a unique community that incorporated a working farm property. The acquisition of the working farm was really to fulfill this vision of building a community that was much different than what anybody else in the market was doing, said Massey. Braestone will feature 229 estate homes designed to function as a community and highlight the project's four-season appeal. The development already boasts 10 miles of trails for activities such as hiking, cross-country skiing, and snowshoeing. The working farm includes the award-winning sales center, which will eventually serve as a community center for Braestone residents. It will be available to our residents to host weddings, anniversaries, parties, celebrations, and it sits on the farm and looks over the pond and the horse paddocks, added Massey. The first homes in Braestone are about to be delivered to buyers, with the company expecting to build at a pace of approximately 40 to 50 homes per year. So we think that we probably have another 5 years of development, said Massey. Prices for the homes range between $550,000 and $1 million, with the average home costing around $700,000. While this may seem high for the Barrie market, it is considered reasonable for residents from the Toronto area, which is just an hour's drive away. The value proposition is incredible, and we have had a lot of different Toronto people and Oakville people come up, noted Massey. Georgian International has deep roots in Barrie, with Massey tracing his family's presence in the area back to 1929. The company is one of Barrie's largest, employing 600 people and generating annual sales of $300 million. Massey's first business in Barrie began in 1981 with the purchase of a Pontiac dealership. Today, the company's diverse holdings include 3 automotive dealerships, an airline called Air Georgian Ladinatid, and a real estate division focused on the Simcoe County area surrounding Barrie. The homestead concept for Braestone was developed entirely in-house by Georgian International. We really came up with it absolutely from scratch, said Massey. The development features bungalow and 2-story floor plans designed with a continuation architecture approach. This results in more majestic homes with wider, more expandable, and more interesting layouts that better complement Braestone's large acreage lots. Strict architectural guidelines for exteriors ensure a consistent look throughout the development. Massey sees Braestone as a more affordable and less intensive alternative for Greater Toronto Area residents who desire a country home. Beyond that, too, the community itself has just so many more things than living on a 10-acre piece of land and being isolated versus having a community that you can be as active as you want or as isolated as you want, he explained. Georgian International has another development underway in the Barrie area, the Windfall Blue Mountain project. This project features detached and semi-detached mountain homes priced between $400,000 and $500,000. The 200-acre project envisions more than 600 homes upon completion. They are basically ski-in and ski-out. They have similar architecture to Braestone, but on a smaller footprint. We have a lot of skiers looking at this project as a second home, and a lot of retirees looking at it as a first home, said Massey. That wraps up today's episode of the Ontario Mortgage and Real Estate Insights podcast. Thank you for tuning in. Stay informed, stay ahead, and we will see you next time.